Hi everyone again. Let's take a look at another week's close where the trends are headed. And this week, starting out with some interesting stuff in the euro, taking a look here at euro dollar at first. Now we have been waiting all of this time to finally have this market go to the downside and continue what it had started when it came down all the way here from somewhere around 140 into the 10105 area. Now with this week we have a breakout below what had already been a previous breakout. Now I said in the past couple of weeks that I already took a short entry here on this candle when the fractal here was broken, but the market wasn't able to get going until just now. Now such a position may as well have been exited here after these 5 weeks after being in that trade. You put your stop above here, then you're stopped out, and now you have your re-entry. You even have a new fractal at that point. Even though that's not the best breakout fractal you want to take, you probably want to have a look at that one right here. Anyway, we are coming down in the euro. It had been down strongly all week pretty much, and we didn't see too much bouncing back into the balance zone. No, now we are below the balance zone, and I'm assuming that we will at least hit the area of 105 again, but it could even go much lower. If we take a look at the overall time frame, the monthly chart, what you can see is that you have a high at that area. Then some sort of correction is going on here, while this has been the uptrend. What we want to pay attention to now is where does this trend continue, and of course it can only be one direction. It can only be to the downside, as it did not move higher. It did not break any fractal inside the balance zone on the higher time frame. If that would have happened, we would have had the initiation of an uptrend, which means a trend in the new direction. Over here now, we're looking at the continuation of the overall trend as well. We're short on the weekly, and we have the next, and that would be important now, we have the next demand zone right there. That is the 105 area, more or less. It could stop there. However, we have more demand that would be coming in down here at these levels, which simply means that would be the next support area. If we just draw these rectangles here really quick, that is what it looks like, and we could have a chance for this to come all the way down to here. It will really depend on if this type of market action is really only the correction of this uptrend. Then you could actually go in, apply the Fibonacci. Maybe you get a turnaround at the 50 or 61.8% levels. Or maybe due to the fundamental happenings with the central banks and what they do to the euro with all the QEs going on, this currency might actually lose a lot of steam compared to the US dollar, and we might see it back at these low levels. Now zooming in a little bit more into the euro, this whole thing here doesn't really tell us much. We don't know if this was a correction to a major up move here, simply because the euro didn't even exist before that time. Here it was traded for bank money or as a kind of electronic currency before it was released here in 2001 to the public. So that's actually all the data we're working with, and to make a decision right now, deciding if this could go all the way back to the 180.85 level or if it will stop at parity, we just have to wait and see. We would have to simply take a look at the trend as this market is approaching this level. We do have 400 to 1,000 points now on this short, possibly, and we will see where this ends. Now remember, we're looking at the monthly and the weekly charts. The weeklies for entering and exiting these long and stable trends. But if you are a little bit more impatient than I am, if you want to trade on the daily and sit down every evening looking at like 30-35 markets and making your decisions where you want to buy, where you want to exit or simply change your stop, then trading on the daily is definitely an option for you. And if you were trading on the daily, of course, in the market that we've seen here in this area, the weekly correction, you will have a lot of signals that will eventually be stopped out because the trend doesn't get going, or you just have so much volatility going on that there is no keeping you in the trend anyway at that area here. And now with these marked breakout levels on the daily, you do have your trend initiation, and you can just trade this in the same direction of the monthly and the weekly trend, because these are the time frames that will tell you where the market is actually headed. So even though we had 1.5 years of going nowhere here in this area, the monthly chart was still clearly below the balance zone. There was absolutely no reason to assume that this would be an uptrend unless you get a break of the high of the correction, which is then again a fractal on the monthly chart, or this high here. But this didn't happen. We now have this breakout to the downside. Demand is coming in at those levels here. Let's see where we are headed with this euro. That would be the first kind of euro pair, and we are just taking a really quick look at the euro Australian dollar, where we have the same kind of situation, and I actually enjoyed this one really much. When you take a look at the side move here, you have your clear side move border support, or whatever you want to call that, to the downside here, and now we're approaching this. It's very likely that it's going to be broken to the downside, and a look at the overall direction of this market will show you that this is the right way to go in this market. You have your downtrend, then you have your correction, and now we're breaking fractals on the monthly towards the trend direction, the previous trend direction. And this just tells us that the next target would be down here. Now, different than in the euro dollar, we have a lot more space left until we reach this very important next demand level, support zone. We are going from 143 all the way down to 115. That's quite a lot of points where this should make some money here, especially since now it's breaking out. Of course, you have to wait all of this time, and you never know if it really breaks out, or if it's just going to be some annoying stuff for 2 years, 5 years, or even longer, where the market is going nowhere. But since we have the breakout, we are following the market. We don't know if it's going to happen, that it really goes down here. We'll just have to wait and see. Now that's it for the euro pairs. There's nothing to mention about gold compared to the last week. We do not see anything worthy here. We are staying below the balance zone within that starting uptrend, hopefully. When we take a look at the monthly, previous uptrend, correction, now we are heading out on top of the balance zone. We have a monthly fractal, and now it will be really interesting to see if the market can fail again right on top or just inside the balance zone, and then we'll get our move to the upside. We were long from down here. We were also buying in here, but then we got stopped out below this fractal here, just because the market went down that much 2 weeks ago, or last week or something. Yeah, last week, of course. Nothing to do in the gold. Maybe we'll see some sort of pin bar or reversal pattern at that point, and then we can take a long again, or simply buy the breakout. Let's wait for that. We have a nice trend continuation going on in the British pound Australian. I have been talking about this. Let's just hold on to this thing. We have 4 entries now, and the market is going our way. The next important demand zone would be down here. This is the all-time low for the British pound Australian. We definitely make this. We are definitely going to make it to that zone. Don't know when, don't know how fast, don't know in which fashion, but that doesn't really matter. As I said, as long as the price is staying below the balance zone in a trending structure, we don't care what the market looks like, what the closing of the candles looks like. We don't want to get all excited or exit our positions simply because there is some sort of pin bar in the middle of a downtrend. Now all that is a internal correction going on, taking the market from its trend direction highs or lows into the other direction, and when then just more or less coincidentally, the market closes while it's in the middle or at the low or high of such an internal correction. You get this pin bar, but it has no meaning whatsoever while the trend is running, and that's why we do not want to look for them here in this scenario. Let's simply hope that the British pound will be trashed much more. Now that would be really good for our trend following positions. Let's not talk about what that means for the British people there, but since I just reviewed the euro, and I'm hoping that this one will also be trashed like crazy, that nobody should be mad at me at that point, I guess. Alright, let's take a look at something else here. The indices. Indices have been in this huge uptrend. We have the correction mode here. This is an internal correction on the monthly. This simply means that on our overall trading time frame, which is the monthly chart, we're actually taking positions on the weekly, but on the monthly we have no indicator, no oscillator, no momentum changing sides from top of the zero line to below the zero line, which means on the monthly we don't have this major correction that you will see in every trend before the last leg of the trend is going to happen. So that means we are now, or we have been trending up on the monthly chart. If we just take a look at that real quick here, we can easily see that here is our minor correction. Here we are making a new high above that previous move, and now we don't really know if this is going to continue or if there's more weakness. If this was it already, the move after the internal correction happened, now being finished, and we are now heading so low that the momentum will change from the top to the bottom or to the low to below the zero line, and that would mean major correction for this particular time frame. So you're looking at this trend, the market is always on top of the zero line. You get new highs in the oscillator. It will give you some divergences too, as we can see here. The last week has not looked too great for the indices. The Dow Jones broke out at that point more or less here. You buy in that, and your stop is currently below this fractal, which is of course below your entry, minimally below your entry. So that would be a small loss if this market actually starts to come down. We do not see the strength that we want or the strength that we need in an uptrend. Now, of course, an uptrend looks something like prices staying above the balance zone, only dipping into the balance zone shortly, giving you that fractal, then continuing up. I don't see that here. As more weeks pass by, especially in the last two, we can see we even go lower now. We are even the market is even giving us a wick here just above the fractal. So that would or could mean that there is not enough strength in here to take this higher on the monthly. Instead, we could see a movement somewhere down here to these previous levels right there, or even lower. Even something like this could be possible, just to give us the momentum on the other side, major correction in this market, and then we'll see it head out further for the last leg up. And that will also be very interesting. If there is a last leg up, that would mean we get a even crazier correction than we do now, since this marked correction will correct all of this. Okay, the marked correction will correct all of the previous uptrend. This correction only corrected this move. This correction only corrected this move. Then we have a real strong move, which is corrected here. But we haven't had any correction that corrects all of this. So that is going to happen at some point, and that will be the one that goes below the zero line. And that should be real interesting if this is going to happen now, since the last week was so missing strength so much that I don't see the chance for this to move higher. We have this scenario in the S&P as well. If we check out the Nasdaq, here we are still on top of the balance zone. It doesn't look that bad here, but of course on the monthly we have the same basic situation. This might as well be coming down, giving us a divergence here at that point, and that would be the initiation of a move into a correction mode. Let's see if that's going to happen, or if price finds some strength again here. That's it for this week. Thanks a lot for watching this, and like it if you like it, and post some comments. Always happy to read your comments. See you next week.